Hey everybody, Marty Mazur. Good evening, the 16th of October, 2018. Just a quick video for you this evening. I thought I should pop in and talk to you about today's big rally. Dow up 548 points, NASDAQ up 2.9%, S&P up 2.15, which essentially was the same percentage move for the Dow. So this was a big day for the market, particularly relative to what we've experienced of late. On your screen there, you can see today's quote from Bloomberg. Pretty much every stock in the S&P 500 is a winner today. The breadth of the advance has widened out to nearly 97% as the session winded down at the time of this quote, meaning today could be the broadest rally this year. March 26th is the day to beat when 96% of the index's stocks advanced. Remarkable. So as regular readers may have gathered, I'm a little bit skeptical about the conditions in the very near term for the market. I noted 7 different headwinds that the market is facing here over the next few weeks, and right now none of them have abated as of this moment. So the question is, with those kind of headwinds out there, should we trust this kind of rally? I wanted to focus on this March 26th comment here, because again, that was the last day this year that we saw this amazing amount of breadth in the market, 96%, and apparently more today. But first I want to show you today's chart of the Dow. So here's this rough pullback that we've experienced. This is on balance volume. I've shared this with you before. I like this indicator. What it does is measures the amount of volume each day and points it in the direction of the actual move in the market. So this tells you that this downdraft had a great deal of volume to it over just a few days, and that suggests there's been conviction on the part of the sellers. Here we had an up move, and it was somewhat moderate, certainly compared to the following down move. So this all confirms that the sellers had definitely more passion than the buyers did on those days. Here we are bottoming out, and here's today's big rally with that really strong breadth. So here's the year-to-date chart moving into that March 26th date. Here's that big move. That was actually about a 680, 690 point move from this close. Notice that on balance volume here was just starting to tick up as well, but we had a pretty negative look as we reached down into the depths here. So let's take a look 1 week later. That really wasn't the end of this particular pullback. In fact, there were several days of the market just jostling back and forth while volume actually continued to paint a fairly negative picture. And then pushing it out a few more weeks, we can see that, yes, we had this big day, but we really didn't see the kind of volume support. The market continued to kind of come up and roll over and so on. So fast forwarding all the way to today, here's that March-April period. As you know, we finally came out of it, recently set that all-time high, and kind of fallen off somewhat of a cliff here. Nothing that's getting me too excited here yet in the volume statistics, although this is just a few days. So as we kind of gauge expectations, if you think about the market much in the short run, yes, today was a very good day. No, I don't think we should quite celebrate just yet. And we've got those headwinds that I think we need to work our way through, the big one being trade, that hopefully we can come to terms with before the end of the year. Beyond that, as we've illustrated and discussed week in and week out, so far general conditions, the underlying macro setup for the market is still pretty bullish in our view. And we think that likely remains the case for a while going forward once these headwinds abate. Thank you, folks, as always, for watching and listening, and be back soon. Take care. Bye-bye.